Hello everybody, welcome back to Univesco TV. This is Rishi Harani, CEO of Univesco. Today's vlog is all about investment and savings. So I'm just going to tell you a couple of points as to why investment and saving should be a part of your lifestyle from a very young age. Many people, especially young millennials these days, are failing to save or rather invest their earnings or part of their earnings for their long-term plans, long-term goals, or rather even for their retirement. So I can understand, when you're 20 years old, you just feel like, oh, retirement is far away. That's another 40 odd years away. Why do I need to save now? Why do I need to invest now? But it's all about compound investment. It's all about compound investment. It's all about savings, long-term plans. If one is able to save from a very young age, or if one is able to invest from a very young age, long term it yields rewards. And the rewards are: A, you have a very good pension pot built for your future. B, you have a rainy day fund. So if something goes wrong, you get sick, you meet with an accident, life can pose some unforeseen circumstances every now and then. Hence, it's always good to have some part of your salary saved and invested. Savings do help, yes, but we live in a very low interest rate environment after the financial crisis. So to keep your money in the bank doesn't necessarily beat inflation many times, and it's not really healthy to just keep all the money in the bank in a current account, for example. So I always suggest to my clients to have a very good, or even just a normal fund where they can just invest their money and have a very stable but anything that beats the market return. When I say beats the market, I'm talking about the risk-free market here. So let's say you invest into treasury yields in the US or UK gilts. These are government bonds. They pay anywhere from 1.5 to 2% interest. Instead of investing in them, maybe invest in a riskier asset. So could be equities, could be mutual funds, could be into there are many other different kinds of asset classes to be invested in: alternative funds, alternative investments, property, for example. In the UK, as we do with Univesco, buy-to-let is a pretty good hot market, and student property is a very good market in the UK at the moment. So you can always invest into real estate, into gold, into equities, into bonds, and it's always good to have a very well diversified portfolio. And the reason for having a well diversified portfolio, if anything were to happen in the market, your portfolio is able to sustain that crash. Hence, I always urge my clients to start investing from a very young age and start saving, yes, but also investing. The reason for investing is that your money has to grow on a compound basis. So you need to invest in something where your money is able to grow exponentially. Because as you know, inflation is always increasing. As inflation increases, the money becomes less and less. So let's say it costs 1,000 RMBs or 1,000 pounds or $1,000, or pick any currency to buy something now. 5 years down the line, you won't be able to buy something similar or even the same thing for $1,000. That would have increased in value. Now, if you keep your money in the bank, the $1,000, £1,000, they would lose value. So back in the day, maybe 40-50 years ago, people would keep money under the mattress. Unfortunately, in today's environment, it doesn't work like that. So one needs to start investing, and one needs to start and there are different forms of investments available for everybody. Some people prefer riskier assets, some people prefer risk-free assets, some people are risk averse, some people are risk loving. So you just have to understand your risk profile. What kind of risk are you willing to take? And once you have established the kind of risk that you're willing to take, you can go ahead and proceed with your investment. You can always have a buy-to-let portfolio of the properties. You can always have a 60-40 equity bond kind of a portfolio, or you can have a fixed income portfolio. You can invest into high interest bank accounts in the UK. You can invest into for example, in China, Alipay and Financial, which is the parent company, provides savings platform where you're able to save onto Alipay's fund, and I guess you get anywhere from 4.4 4.6% interest per annum. So anything that's beating inflation, that's fine. Just keep your money there or invest in gold. Gold is on a 6-year high at the moment. I would always say investment is the best form to go ahead for planning your future. Thank you so much for watching.